Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here tonight does know that you do trade at your own sole discretion. All right, so here's what I'm going to do. I'm going to come over to a Weimar chart, YM. We have quite a few folks that are visiting us here this week on like an open house kind of a thing. So I'm going to back up a little bit and do a quick, refresh of what it is that we do here. So most of you know, and everybody listening on the recording here that couldn't make it tonight, we trade, we Viper and all of our subscribers all over the world trade the futures markets on an intraday basis. So generally speaking, we don't have any overnight positions that we hold. We're flat come the end of the trading day. And so what we're looking to do is take advantage of short-term volatility in the market, in the markets, plural. And just a quick question to make sure everybody's awake here. Why do we trade? Why are we traders? What are we trying to accomplish? What are we doing when we trade? I mean, we're putting capital at risk. I understand that. What's trading all about? You having fun? Something to do? Something to keep you awake in the morning? Reason to get up? Good. Well, yeah, I get make a living, making good money, to profit, retire, Dave H. Earn a living from Steve, learn a skill set to make good trades, make a living so you don't have to work 40, 50 hours a week, Roger. Challenge trying to beat the other trader, and Bill C is looking for some extra income. Well, now I want to put a caveat on this, and I want this to be very clear, okay? There's two super important things before we get into details of taking trades here. Two super important things that you've got to take into account if you're going to trade the futures markets intraday. So everybody in here pretty much said something related to the fact that you want to make money. Okay, so that's pretty clear. So let's just make that number one. We trade to make money. That's why we put our capital at risk. We take all the time to go to the webinars in the live room and to learn the indicators and what have you to make money. That makes total sense. However, there is a caveat to this. There is an important caveat that no one mentioned, and I want to mention it now because it's the second part of this whole trade to make money scenario here. And I'm going to phrase it like this. In the least amount of time. Now, what does that mean? We trade to make money in the least amount of time. Why would we say that? What does that mean? Why did I put this second part on here like this? The make money part we all got. Everybody said make money. But nobody said this, least amount of time. Why would it be the least amount of time? Why wouldn't it be the complete opposite? Why don't you say, Charles, you maximize profit by trading the markets as long as possible and get exposure to all kinds of volatility, market moves, and the more I'm trading, the way I see it, the more money I'm going to make. I mean, isn't that how it goes? Isn't that how it works? The more time you're in the market, exposed to the market trading, the more money you're going to make. No, it's completely the opposite. That's right. Overtrading is the kiss of death, Steve N. Mario says, I used to think of it that way, but I've changed and learned a lot over the years. That's right, Mario. Good for you. So here's what we mean by this. And don't worry, we're going to get into trades, but you got to have some fundamentals to understand what we're trying to do here. I think a lot of market participants that we've seen over the years just want to sort of jump in and not really think about what they're doing. Okay, so when you're trading, you are exposed to risk. And when we say the word risk, most traders that I've known over the years, traded with over many, many years, is that they tend to be an optimistic bunch. What I mean by that is that they are always thinking about the profits. But when we say exposure to risk, it means profits, yes, but what does it also mean? Losses. Nobody wants to talk about the losses. Everybody wants to talk about the profit. It's kind of like how many of you know any fishermen or people that pan for gold, different types of people like that? They're optimists, right? A lot of us know family members or friends that maybe go to Vegas or do some gambling at a local casino or play a little poker. And they're always talking about what's the first thing you hear from somebody who fishes or gambles or plays cards. What's the first thing they're going to tell you? The big one. The big one they got. I got the big one. I went to Vegas, and I'll tell you, I hit that machine. I made $5,000. I came home. But what they don't tell you is any about this, right? What about the other 6 or 7 or 8 times you went up there and you lost money? I mean, the $5,000 is probably, if you're lucky, getting you back to break even. Now, look, I am not saying that trading is gambling. I'm not trying to say that analogy. What I'm simply saying is this, is that the longer you are in the market, the more you're exposed to risk, and that potentially means profit, but it also means losses. So, for instance, in the room, you might hear comments to the effect of, yeah, I'm pretty close to my goal. I'm stopping trading. Gary and I were done trading, I think, around before 7:30. So it's possible you want to find the optimal trade setups as early as possible. Nail the setups, conceivably with 1 or 2 trades. It's possible. And then be done. Now, when I say be done, I don't mean that you go disappear and have breakfast and never look at the market again. What I am saying is that you go into sim and practice. All right, so let's call this number 1 consideration in the market. Let's call this number 1. We'll put that right at the number 1 slot. What would be number 2? Okay, let's come down here and let's get ready to put in number 2. What's number 2? So trade to make money in the least amount of time. Now I got to type in something here for number 2. What should be number 2? It's probably not what you think it is. But I wouldn't be surprised to see if some of you get it. So those of you that have been to lots of my webinars, I've said this like 400 times over the years, probably. Maybe more than that. I don't know. Hundreds of times I've said this. Number 2, most critical, important thing. Draw your lines, control losses. That's an important thing. Peter W. says, I hit my goal at 6:35 today. Good for you. Risk management, enjoy your trading. That's good. That's important. Control your losses. Have a daily goal. That's all on the list of the top 4 or 5 items. No question about it. Roger W. just got it. Getting the entry at the right place, Jim. Those are all great answers. And you know, if we're, and I'm not going to do this, but those are all critically important things: controlling, managing your losses, exposure to market, timing of good entries. That all would be on the top 5 list. No question about it. Instrument selection has everything to do with your success. I would go so far as to say it's critical. I would actually put these as 1A and 1B. I mean, they're that closely tied to each other. Critical to your success. What do we mean by instrument selection? What are we talking about? What is he going to pick up a flute and start playing a trumpet or something in a band? Instrument selection? Tuba? You going to play the tuba this week? In fact, I am going to do that. I'm going to go ahead. I'm going to make this 1A and 1B because they are that closely related. I would not even put that at number 2. I'd put it at 1B, like tied for number 1 in terms of critical success to your trading. Yeah, which market you're going to trade. We're going to look at tonight in detail the difference in volatility between different markets. Now, in the room, most of you know that we show crude oil, and we know that that has a certain amount of volatility associated with it. Plus, it's $10 a tick, so it's twice the risk return of $5 instruments like YM, Russell, and NASDAQ. We also look at gold. Gold's also $10 a tick, sometimes very methodical in its movement. Now let's talk about NASDAQ. I want a quick show of hands. How many of you trade NQ? Show of hands. How many of you trade NASDAQ? Okay. Wow. Okay, out of everybody in here tonight, and we got a great turnout here tonight, let me just count the yeses that people who said me. I've got 1, 2, 3. That's it. Most of you have typed in the following, like Carl G, for instance, has typed in no more, not anymore. This week, Russell is killing me. We'll talk about that in a minute, Dave. Yes, but not today. And Steve says occasionally, but it's the hardest instrument to trade. All right, so let's come back here and talk about this for a second, okay? Here's NQ. This is NASDAQ, all right? I want to show you something. Let's come back to the open. We're going to have to scroll through about 9,000 bars to get back to the open today, but let's just go ahead and do it anyway. Still going. Still going. 6:30 Pacific is right here. I would say that, in my opinion, right now, and this could change over time, of course, because market volatility does change over time. It's not anything set. Volatility spikes due to seasonal things or news or algorithms from the big boys running different scripts. So lots of different reasons why volatility changes. And there is sort of, how would you say, in NASDAQ, a plus and a minus to trading NASDAQ. What I think lures us into NASDAQ is that we tend to, as traders, what we tend to focus on is some big moves like this, a big move where it spurts up. And it's not unusual for NASDAQ to flip and tank, 80 ticks. But what we fail to make note of, and this is where NASI's kind of like a how would you say, what's the best word for this? Alluring temptress, if you will. That you perceive that there is a lot of profit opportunity here, but what we tend to overlook is the spiky, whippy nature that you have to fight your way through to get to the big moves. For instance, let's take a look at right here. Here's a good example right there. What do I mean by that? Well, here, it's heading up, comes down, it takes a spike down, comes up. You think it's going to continue. It doesn't. It pulls right back to where you got in. And then finally, if you fight your way through all this stuff, I'll just be nice about it, stuff, you're lucky, maybe you catch a chunk of this move right here. So what I'm trying to say is this, is that, I'm not besmearing NASDAQ as an instrument, I'm just saying it's one of the toughest ones to trade because you've got a lot of algorithms fighting each other in there. And unless you got a sophisticated script that can handle that, it's really tough to do it as a trader. The fills, the slippage is huge. Um, you put a box on the mid band, you get filled 10 ticks up. And by the time you realize it, next thing you know, it's back in your face. Let's say you threw a box on here at the mid band. By the time you get filled, you're up here. And then you're chasing the thing up, and all this occurred in like a minute. Just to put this in perspective, this mid-band box set up at 633 and a half, 634, and by the time it got up here, this is 1 minute later. By the time you get filled and you're up here and it's pulling back, this is 1 minute later. It's extremely difficult to trade. Extremely difficult. I would suggest if you want to try it. And by all means, for those of you who are doing it and making money, more power to you. Because I struggle with this instrument most mornings. In fact, if you notice this morning, Gary and I hardly made any calls on NASDAQ. Very few. In fact, we're going so far as to discussing maybe taking it out of the room altogether. Would that be a problem for anybody? Just show of hands. If we took NASI out of the room, show of hands. Yes, get it out of here. No, we better keep it. Just cast your vote. Yes, get it out of here. I don't want to look at it anymore. I hate that instrument. Or no, please keep it. I trade it and I love it. Yes or no? Yes, get it out of here. Okay, we got one, keep it. Good riddance from Dave. She's scary. Only reason might be correlation. It should be gone. Okay, all right. So here's what I'm trying to say. There is a distraction factor involved here. Let's use an example. For those of you who are looking at the charts in the room and you have your own charts, it's a lot to balance, right? So let's take a look at YM and NASDAQ right next to each other. This is all along with this whole, has everybody got this? Trading, make money in the least amount of time and instrument selection critical to your set. If everybody understands that, I'm going to take this off the chart. I'm going to move it out of the way. I don't want to get distracted with that anymore. Everybody understands what we're talking about there, right? All right. Well, let's come over here to 630 and just take a look at these puppies. Let me see if I can get these two oriented. Just give me 1 second, please. I'm going to try to get these two charts somewhat oriented so we can track them. I'm not going to do the entire trading session. I just want to look at the first, say, half an hour to hour of movement, okay? Where's 630 on here? Way over here. And there is some slight correlation, but there are obviously discrepancies between the two. I mean, for instance, over here at 630, this vertical line is the open of the market 630 Pacific, where we start trading the equities actively. And you can see here clearly that YM was still pretty much in an uptrend going into the open, right? It had a slight little retrace deeply to here, and then it resumed heading up. And from here to here, this was 7 o'clock. This whole chunk of movement took a half an hour, 6:30 to 7. Right? On NASDAQ, you're looking at, let me see if I can scrunch this down so I can show it. 7 o'clock on NASDAQ isn't till, well, let me show you. Now they're both $5 a tick. So from a risk return perspective, in terms of how much money you can make per tick, they're pretty much the same. However, the amount of volatility is extremely different. Hold on. I thought this would be like 9,000 bars on this chart on the left. Just give me 1 second, please. We're still not at 7 o'clock. Oh, Lordy, Lord, Lord. There, that's close enough. Seven o'clock is even further over to the right, but I can't keep exchanging the chart. Just give me 1 second here. I'm sorry it's taking so long. I'm just trying to illustrate a point, and then we'll move on to the trade setups, okay? There, we're close to 7 o'clock. There, 7 o'clock's way over there. I hope this shows the point I'm trying to make here. This amount of time on the left is 6:30. On the very far left here is the open of the NASDAQ market at 6:30. 7 o'clock is way over here. So you had all of this movement in 30 minutes. To contrast that, this same arrow on the right is YM right here. This amount of movement happened in 30 minutes on YM as opposed to all of this right here. Now, which one would you rather trade? My personal selection is YM. I mean, because I can deal with this kind of volatility. You know, these moves are, you know, now granted, here's the trade-off. Okay, here's the trade-off. The moves are not as large. But how do you compensate for that? How do you compensate for the fact that the YM moves aren't as large, but they're much slower and much more predictable? You leverage up. Eventually you leverage up. So instead of 1, you put on 2, you put on 3, you do the scalp, you have the runners. Okay, that happens on YM. What happens on NASDAQ over here is that there are these intense, very spiky moments that occur. For instance, coming off of this short right here, which if you took, either one of these could be your one and dones in the first like 8 to 10 minutes if you caught them. That's the trade-off with NASDAQ. However, you know, they're very spiky. It happens very quickly. This trade right here set up at 40, and maybe you got in and got out up here at 48. So 8 times 4 is 32. So this is a 32 tick pop. It's a 30 tick pop right here real quick. That's $150 a contract. Literally like 4, 5, 6 minutes into the market, you could be up $150 if you snag that on one lot, right? Let's say you threw a little box here at 638, which I think we called in the room to throw a box right here. Still moving pretty fast. If you caught the short and got filled at 45, trailed it down and got out here at 28, what is that? 17 times 4 is 17 points times 4. 54 ticks times 5, $260. So yeah, if you want to get done quick and you can nail these trades and you can keep up with NASDAQ, by the time you got over here to 640 and got out of this trade, less than 10 minutes, you could, on one lot, you could have conceivably been up as much as $400. Now, where it gets tricky on NASI is when you get over here, okay? Like when it starts doing this. See this right here? You think it's going short again, and then it spikes up in your face, stops you out. You think it's getting short again, spikes up here, and then now it starts heading up. You throw a mid-band box right here. Think it's at the time this occurred, put yourself in your shoes at this. The background is green. You're thinking up. Maybe you didn't even turn on the short and you missed this. Maybe you took the short here and you took a full stop out. So there's maybe 12 ticks, a chunk back of $60 of your 400 going back in. That's the way NASDAQ rolls. You know, stern taskmaster. It can give it to you quick. I mean, you can make 150, 200, 300 in a pop real quick. And then when she whips around the mid-band like this, it can take it all back from you in like 20 minutes. Dave, now that's an idea. I would. That's something you could look at. We're not going to show that in the room, but Dave says to compensate for this whippiness, he goes up to like a 6 or an 8 range chart. So you can do that, okay? And your boxes are going to be a little bigger. So that's something to take a look at if you want to trade NASDAQ. But I just wanted to contrast how much these equities are so different in their movement. Some of these mid-band boxes worked out. I mean, here was one that worked out here too. But these are really quick. I mean, it just doesn't sit here for very long. I mean, you're talking about a minute or less. You got to draw a box quick, or you better put a market order in or put a quick limit order in to try to catch this move. This short right here was 640. I don't know. Maybe you got down to 30. 10 times 4, 40 times 5, $200 short. All I'm saying is this, is that instrument selection is critical and key to your success. And if you go in there and you try to trade NASDAQ and it just whips around, you make a little money, then you give it all back and you just can't seem to be consistent, then NASDAQ is not for you. And furthermore, I would submit to everyone here tonight and everyone listening that by keeping it in the room, it makes it a distraction. I mean, let's face it. If you're looking at Weimer here and it's not doing too much, maybe you got a long trade and you made, I don't know, $100 here, and maybe you caught a little bit of a short and you made $50 here, and maybe you get long and you catch a little run, you get $150 here. It starts to add up. It's not a lot. It's not as much as over here, but it's much more slower and methodical, and your blood pressure is a lot lower, right? Let's just advance this one more thing, and then I need to move on to another instrument. Let's see what happens after 7 o'clock. This is where you get into a problem with NASI. It got into this range for a while. Anybody remember this? Here you think you're heading up, and then it spikes down. You try to get in long here, and you get sucked into a long, and then it stops out. This will kill you on NASDAQ right here. It really will. Well, we can look at ES. I was talking to Gary about looking at ES and putting it in the room. Just a quick show of hands. Does anybody trade ES? See this area right here? That'll kill you. That'll kill you on NASDAQ. I mean, all the money you made over here in the first half an hour, if you kept trading after 7 o'clock, you could have just gotten hammered in here if you weren't trading that range just right. Anybody trade ES? Show of hands. The E-mini S&P. Ralph says in that square to the right after 7 a.m. Pacific, that's where he lost all his profit. Ralph, that's where NASI will get you. See, that's what I was saying a little bit earlier. The thing that is hard to deal with on NASDAQ is that, yes, okay, you can make the case, look, beautiful 30 tick short, a little scalpy 10 tick short, right? There, nice move right at the open, 40 tick here, 430 tick there. But then it's like the losses, like the big fish that got away, like we talked about earlier. Nobody wants to talk about this area right here, where it just eats you alive. I know for a fact, I don't think Gary and I called this at all. In fact, I think Gary said, we're not going to call NASDAQ for a while. Remember? Remember in the room? ES traders. Jim, 6E has been moving pretty well lately in the morning. 6B is clean. 6J or EMD from Chris. Okay. Well, I'll tell you what we can do. Let's do this. In the room in the morning, we'll watch NASDAQ for a little bit at the open, okay? And then maybe we can pop up some other charts to look at as a team and sort of get a consensus whether we want that to be 6E or ES, or maybe for a week, like next week, we'll try a different instrument each day. The other thing we can do, and we talked about this, is just instead of having 5 charts, maybe we just stick with 4 charts. We used to have 4 charts and before we brought gold in. Because that 5th chart can be distracting. What happens is you get bored and complacent on something like YM because it's not moving that much. You're getting little scalp trades here, 10, 15 ticks here, 8 ticks there, 15 ticks here, nice 20 tick pop right here. Then she took off and ran like a big dog. That's what YM does. And so what happens then, and I know it happens to some, and it happens to me too. You know, I'll be like, oh, let's go see what NASDAQ's doing. And next thing you know, you're back over here. You're all sucked in again, right? It's almost like if you're going to trade NASI, you almost can't trade anything else. You have to almost be solely focused on that. So if you're going to trade NASDAQ, that's what you got to do. If you're going to trade YM and gold and crude and other instruments, then NASI's probably going to be off the table because you can't wet nurse NASDAQ and then try to do 3 other instruments. You just can't do that. Let's get into some entries. All right, I want to pop up some other instruments. I'm getting to the entries right here. Let's get off of this. I don't want to talk about NASDAQ anymore. I've had enough of that instrument. Let's come back over here. Stand by 1 second, please. Hold on. All right, I want to talk about crude oil and gold, and we'll try to squeak in some more a Weimer trade and maybe a Russell trade if we can. If we don't run out of time, let's get crude up here. Crude's had some really good moves lately. I know some of you were scared of crude oil. You know, you're worried about the fact that it's pricey at $10 a tick, and crude for a while there, you know, about 6-8 months ago was pretty spiky. But now you're getting pretty good moves, and it's fairly respecting. Let's take a look. Stand by. I'm pulling up a crude chart. Give me 1 second, please. Here we go. Here's today in crude oil. Gary opens the room at 5:55 Pacific to trade the crude oil pit open, which would be right about here. Dave, that's a good point. I lose focus when I have to move between many charts and looking at the charts in the room. Yeah, it can be really, really confusing. Now, let's go back and recreate the first half an hour on crude very quickly here, and then we can get gold up and some other things before we run out of time. Now, here's another important thing that we need to do when we start, and I'm sure Gary does this in the room when he opens it up live for trading. And this would be probably number 3 on our list. First one is making money as quickly as possible in the least amount of time. Second is instrument selection. And third would be what? Like here's the crude pit open coming up. What should we be doing to prepare ourselves in this area right here? What's something critical we need to really look at doing? I'll give you a hint. It's something on the charts. What should we do to prepare ourselves on the chart on crude oil? Say tomorrow morning. Tomorrow morning you come in the room early and Gary's in there getting ready for the pit open. What's the first thing we're going to do? Yeah, draw some lines. Good. We simply put our support and resistance lines in here. And we can pretty quickly make note of the fact that crude was in pretty much of a range going into the to the pit open here. Right? Trading pretty much in this range. Now, when it comes to this area right over here, I'm going to advance the chart. And you tell me whether you're getting, and when you see a trade, short or long, you type in S or L. Okay? Ready? I'm going to advance the chart. The pit's open, 601. We're in a range. At this particular moment, we are in a range. And you can pick your spots. You're shorting. Let me give you some help before we do this little exercise together. You could be shorting the top. You could be buying the bottom. So when you short the top in a range, we look to cover some at the midband and we look to cover some at the bottom. And when we're buying, we haven't started yet. Hold on, Jim, Kathy. When we're buying support, we take profit at the midband, trail the stop, and then take more profit at the top. So when you're in a range, you're range trading. You're not doing midband boxes for the most part until the circumstances change. I'm going to go slowly. Pit is open. And let's pretend this is tomorrow morning and we're sitting here watching this together. Blow the chart up a little bit more so you can see it. Okay, it's 6:08. 6:10, 6:15, 6:31, 6:35. Pit's been open about a half an hour now. Okay, can advance the chart a little bit more. All right, I'm going to pause right here at 6:43. Some of you typed it in. Some of you got it. Roger. By the way, and I think it's crude sat here for a while, and many of you typed in a long here, and that's perfectly acceptable. That's perfectly acceptable. Long there. I don't know if Gary called that. In fact, I think he did. When I came in the room, you guys were already long, and it was up here. Remember? Didn't he put a box down here and get long? Anybody remember? Long entry? I think you guys got long off the support. Remember? I think he had a line here. I came in the room a little bit later. I got in over here. I think you were already long. Yeah, that's right. That's right. That's right. And so remember what we said. If you're trading a range and you're buying support and taking profits and then shorting the top. So it got here to the midband. There's your scalpy trade is off. And then you're looking to take profits on the rest of it right up here when it hit the top of the range. So for those of you that typed in long down here, that was a good call. It was long. It was in the room. And it turned out to be a nice trade. You got maybe 65, 80, 20, 21, 22 ticks. If you had two contracts on, maybe you got 10-tick popper and then a 20-tick popper. So with one lot, that's about $200. With two lot, could be maybe 300. You got the 10, you got the scalpy here, and then you got the 20-ticker. $300. Now, by the way, if you got $300 on one trade in the first 20, 30 minutes, would you be done? $250, $300, would you be done? Would that be it for you? Just show of hands. Some of you might have more modest goals. Some of you, I know, I've talked to traders that have goals of like 100, 150 days. That's all they want a day. That's all they want. Some the 500, some 1,000. I see a lot of you saying, yeah, I would be done. Double that and I'd be done, from Peter. Okay, good. 500 a day? Well, 500 a day, well, then 250 wouldn't get her done. You'd need one more trade, right? All right, let's move on. Now, I want to make note of something here that's going to help you when you look at this, say, tomorrow morning, and you're faced with a similar condition. When this swing was broken right here, and this is important to make note of, our little spidey trading sense has to perk up a little bit. When that swing was breached, what happened to the background color? Like, what was the background color on this chart all the way from there to there? What is this color? It's like a neutral color, right? It's a neutral color. Pretty much the mid-band is flat. We drew our support and resistance lines. We knew we were in a range. Transitional background, we call that transitional background, exactly, right. But when this little swing was breached, what happened to the background color right here? Did it change? What color is it now? It's red, right? I'm colorblind. I can tell that's red. So with the red background and coming up and kissing this resistance area, is there a trade here, yes or no? Right here. Is that a trade? Yeah, it's a short. Exactly. And some of you typed that in. Roger, Carl, PW, Peter. That was a short. That's a legitimate short trade right there. That's exactly what that was. If you were long, you could have taken your profits and flipped it short. And as we discussed in the ranges, your first target is the midband for a scalpy, and your second target is, of course, the bottom of the trading range. Hey, Adam, no problem. Well, I see your calculation there, Dave. Just real quick comment on coming in here from Dave H. Here's the thing, and I see this all the time. Is it reasonable to do a calculation as follows? If I make $200 a day and I trade 250 days a year and I take 2 weeks off, how much should I make a year? Is that a reasonable assertion if you're a trader? So you would say I should make $50,000 a year if I make $200 a day. Is that reasonable? Is that realistic? Is that how trading works? No. This isn't a job. You're not going into an employment uh, company and they're giving you a salary check every week or 2 weeks or a month that has, $2,500 stamped on it less taxes. It doesn't work that way. Okay? And just debunk the myth. Trading doesn't work like that. Trading is a business. Okay? You're going to have wins and losses. If you say something like, well, Charles, I really like to make $250 a day. The appropriate way to think of it is, I want to make, here, let's just do this real quick, and then I want to get to these entries, finish these entries up. We got to think about it as a net 250 a day. What does it mean by net? What does net mean? Why did I put net in there? What does that word mean? Well, you're going to have profitable days. But are all the days going to be profitable? No, you're going to have losing days. So if you said 250 per day, and one day you make 250, but then the next day, here, the first trading day, Monday, you make 250, and then Tuesday, oopie doodle, you lose $150. And this goes on. This repeats itself. Next day you make, I don't know, 210, and then you lose 100, and then you lose 50, and you back-to-back losses, and then you have a good day, you knock it out of the park, you make 300. Okay, do the math. Okay, I want to put just ... This is going on to infinity, all the different days. So when you say net, you want a net average per day. So in actuality, you probably can't cut yourself off after you've made $250 if you want to net 250, because realistically, if you cut yourself off artificially at 250 profit, when you start taking losses, it's going to draw it down and you'd be at net like at a 50 or 100. Does that make sense? Yeah, don't quit your day job, Kathy says. Yeah. All right, so all I'm trying to say here is that you got to back into this number. Okay, if your goal is 250, you're probably going to have to make at least 350, 400 a day on the profitable days to compensate for the losses that inevitably will occur. Okay? All right, enough said about that. All right, so we caught the long in the room. We made a couple $100. We caught the short. We're up. We caught the short. We had one lot on there, and we made another 200. We're up 400. And now it's 6:45. So you've been trading roughly 45 minutes. And you're up $400 on two winners. Should you keep trading? Well, if your goal is $400 or $500, yeah, you would stop. If your goal is 200 or 250 or something under 400, yes, you would stop. And I'm saying the goal over here, whatever your net total goal is, whatever that net, your calculation of your goal. Yeah, so it's all a function of your goal, right? So yeah, you could, if your goal was, say you want a net 250 a day and you made 400 bucks compensating for losses, quite possibly you'd be done here, and it's less than an hour and you took 2 trades. Now let's move on. You tell me, and I'm going to go through this bar by bar, and you tell me if you see another trade set up. Ready? Here we go. Kind of bump along a little bit here, isn't it? By the way, now you're at 7 o'clock. So if you started at the crude pit open, you've been trading almost an hour right now. Okay, I'm going to advance. I'm going to expand the chart and continue to advance the chart. All right, I'm going to stop it. I'm going to stop it right there. This is harder than looking for gold nuggets. Well, it really isn't. It really isn't. Okay, in all fairness, let's talk about this for a second. Okay. After the background turned to red, and we started to put in a series of lower highs right here, and this support level was being challenged over and over and over again, and each time it went up, it could barely get back up near the midband twice. I know we took this trade in the room. I remember because I took it. What are we looking for in here? Does anybody remember what we said with the red background? What kinds of trades are we looking for here? Shorts. Wasn't it shorts? Aren't we looking to short the market? Isn't it coming back up close to areas to short? Let's check in here. In other words, what I'm saying is at this point here, we're no longer looking to buy here. We're not buying this. We're not getting long here anymore, right? That's off the table. When it came up here and rolled and gave us another short off the midband here, that was definitely telling you to short this market. Get ready for it to break. And the ironic nice thing about it is that not only did you get a chance here to short it and here in these two ovals, but it did the classic ABC thing here where it came down, took out the swing, came back up, hit the resistance level, and rolled over. And then it just fell off the map. Came back up. Does anybody see another trade at 725? Right here. Called that out live. We stopped out down here. Remember we said follow your trail stop using stealth? It's another midband short. That's exactly what that is. Let's say that you didn't even get into this short until it came up and rolled right back in here, and you threw a little box on it on this setup right here. And you stopped out down here. How much was this trade worth? Let's say hypothetically you missed this trade, you missed that trade. You didn't get long, you missed this, you recognized that maybe you shouldn't be buying this anymore, but you didn't get that short and you didn't get that short. And it finally broke and you maybe in the room, we put that in and you take the short and you put one lot on it. You don't even scalp it. You just put one lot and you're short at 55 and you get out down here at, 20. How much was this one short worth? Right here. About 350 bucks. Yeah, about 30 to 35 ticks. $10 a tick. You're looking at 350. Comes back up, retraces to the midband. Is everybody able to see these trades, or you're not seeing them? Just type in just type in. Are you able to see these? Are we explaining these correctly to you? I mean, because sometimes I get a feeling like you're just some of you just aren't seeing these, and maybe we're not showing it correctly. Maybe we should show it differently. Is it not clear what to do when the market's doing this? Yes, yes, it's not clear. Yeah, no, it's not clear. Oh, Mario's saying yes, it's clear, crystal clear. Okay. Ralph says I can see them now, but not always when it's live. Peter says I have trouble following the CL trades. I see it, but sometimes like the ones I take don't work out. Well, what are you trading, Minnie? YM. Okay. Mario says it's just having the patience to sit and watch them and not jump in and getting sucked into hope trades. Dave says it's foggy. It's different between live and a webinar. Well, I mean, what we try to do, maybe we'll try to work on doing a better job of this, is trying to be consistent from what we show in a webinar. And I'm trying to show what we took, this is what we showed and took in the room. I remember distinctly that Gary was long from here. I think we said to short a roll over here. I don't remember exactly. I know we said to short it here because I took it. And stopped out, came retraced right here, textbook mid-band roll trade. I mean, it doesn't get any better than that. And then bam, you had another one right here. But here's the thing. I'm getting back to instrument selection, which was number 2, 1B, right? Some of you typed in here, I just can't see the oil trades. Well, then you know what? Maybe you don't trade oil. Okay, we're trying to show different options for different traders. Let's take a quick look at gold before we got to wrap up here. Stand by. Let's get a gold chart up here. Tell you what I'm going to do. Here's what I'm going to do. Here's what I want to do. I have the webinar on Saturday morning. I'm going to try to come at this a different way. I'm going to try to come up with a different way to do this that might be more helpful to everybody. All right? Because for some reason, I think it's clear, but sometimes if you're not getting it, maybe we're not showing it correctly. Okay, let's pop gold up here before we run out of time. We're almost out of time here. Let's try to get a couple quick golds up here. Give me 1 second, please. Man, I'm having trouble with the gold data. I don't know if I'm going to get squeak gold in. If it doesn't load, I can always do it on Saturday morning, 9 o'clock Pacific, and it'll be recorded. Yeah, we can automate it. Yeah, I hear what you're saying. I'm getting feedback that sometimes it's confusing in the room, and that's why I think there's a case to there's a request to look at 6B. Let me see if I can get 6B to load. Stand by. We can look at gold on Saturday morning. My apologies on that. Get that all teed up for Saturday. We'll try to take a different angle on explaining things that try to make it a little more clear. Okay, we had a request to look at 6B. Carl, I've got a 6B chart up here. Ready? Here we go. Well, we are going to go with fewer instruments, Russell. Roger. We talked about eliminating. And we're thinking that 4 charts might be a lot clearer. Just get NASI out of there. It's very distracting. It really just sucks people in, winds up losing them money, and then we're spend all morning talking about NASDAQ, and meanwhile there's 2 gold trades, an oil trade, and 1 Weimer, and everybody's sucked into NASDAQ like a vortex. All right, so here is 6B. Bill, we do everything with a 4 range, and that's just to be consistent. You can use Renko bar charts. You can adjust the bar size if you see fit to whatever instrument. Some people use a little bit larger bars like 6 or 8s. That's fine. For consistency of showing and teaching, we've always stuck with the 4 range. We don't want to flip from one day to a 3 and then a 2 and then the next day is a 6 and then everybody, what the heck am I trading tomorrow? Now, here's the thing to note. If you're going to trade the currencies, and this would be any of these currencies, particularly the euro, the dollar index, the Aussie and the Asian session, British pound 6B, which I show right here, the Canadian 6C. It's kind of, if you ever traded Forex, it's a mixed basket of tricks. For instance, here you can see that after the European session opened, all the way until 5:30 in the morning Pacific, 6B was in a range, right? You would have put your lines here. You might have been buying support or shorting, or you might have just sat back. There was a couple of places where you had a good trade set up. Let's suppose that you boxed it in here. You could have gotten long out of this box right here. But if you didn't get this long, was there another chance to get long on this chart? And if so, where is it? We'll give you 5 seconds. Either time-wise or level-wise. What I'm saying is you missed this box. It broke out through resistance. You're not in it yet, but you want to get in it. Where would you have done it? That's how you have to look at it, right? That's how you have to look at it. I missed the initial entry, and I'm looking for what to get in. The trade is long. Background is green. Bars are blue. We're stair-stepping up. I'll help you with that. The trade is long. Where could you have gotten back in? Or got in? Time's almost up. 3 more seconds. Look at what the market did. The 6B. This would have been 6B after 6:30. If you were trading after 6:30 Pacific time, where was the spot to get in? Time's almost up. Well, here, NT Renko candle and Renko candles, yes, they're about the same thing, Kathy. The only thing you got to be careful of is that sometimes you don't get as clear a definition of support and resistance because of the smoothing that you get out of Renko. Renko smooths things out, so sometimes you don't get the swings. Okay, time's up. Yeah, most of you got it right here. Pullback was right here. Just pop through stealth. You got a nice, beautiful little, now it didn't get to the mid-band, but that's okay. There was enough of a pullback here to get you long. If you said anywhere around 650 or about 485-ish, that was your long entry right there. One thing I'm going to make a suggestion I think is going to help everybody is, we all can get, 10, 15, 20, maybe 30 minutes or more of free time during the day where you just got some free time to look at charts. I would do this. I would go cycle through some of these instruments that you're interested in. Take a look at crude. Take a look at gold. Take a look at NASI. Take a look at WYME. Take a look at the Russell. And just move the chart back and forth like this. Simulating in your mind's eye what real time would look like. Now, you can also do this if you get market replay, and you could replay the market and take the trades that way. But you can just simply simulate it. Advance the chart forward, advance the chart backward. Because essentially what you're doing is you're trying to help yourself to develop strong pattern recognition over and over and over again, so that when you see that pattern and you hear it called in the room, it makes it a lot easier to see it yourself on your chart and go ahead and take the trade. Just move it back and forth. Move it up, move it back. Was there another trade here somewhere? Here's 6B. Here's the breakout box. Here's the pullback. Is there another trade here? Let's advance the chart just a little more and then we'll wrap. Another trade? Anybody? Right now? Here, I'll advance it a little bit more. Blow the chart up a little bit. Yeah, mid-band long, right there. Went right back to the top. All right, tell you what we're going to do is I promise on Saturday I will work on a slightly different approach to try to help everyone see these trades a little bit better. We'll work through a lot of different more instruments. We spent a lot of time sort of dissing NASDAQ. I think she's going to go bye-bye in the room. We'll get back to 4 charts. I think that's where that's heading, at least in the short term. And then that's going to simplify people's lives a lot, I think. Final questions. Carl, thanks for coming. Roger likes 6B. He says very respectful of swing.